Hello everyone, I hope you're all doing well. Before we start, I hope all of you have watched the video I shared earlier. Today I'm not going to repeat the video. Instead, I'm going to explain the same concept in a much sorry, simpler way using real life examples. By the end of this session, I want every single one of you to clearly understand the basic of Forex. So let's begin the topic. What is Forex? Forex stands for foreign exchange. No, don't let the name scare you. It's actually very simple. Imagine you're going to India to the Imagine you're going from India to the United States. In India, we use Indian rupees, but when you reach America, you can't use Indian rupee in most places. You need US dollars. So what do? You go to a bank or a money exchange shop and exchange your rupees for dollars. The process is called foreign exchange. No, in trading, we're not exchanging money because we're traveling. We're exchanging currency because we believe their price will change. If our prediction is correct, we make a profit. So, Forex is simply the business of buying one currency and selling another. What is currency pair? Now, here's something very important. In Forex, we never trade just one currency. We always trade two currencies together. That's why it's called a currency pair. For example, EUR USD, it means Euro US dollars. EUR means Euro, USD means US dollar. Now imagine these two currencies are having a competition. If the euro becomes stronger than the dollar, the price goes up. If the dollar becomes stronger than the euro, the price goes down. So we're always comparing one currency with another. Base currency and quote currency. Let's understand them. In EUR USD, the first currency EUR is called the base currency. The second currency USD is called the quote currency. If the price is 1.000, it simply means it simply means 1 euro is equal to 1.10 US dollars. That's all the number means. Buy and sell. Now the next question is, why do we buy and when do we sell? It's actually very easy. If you believe the first currency will become stronger than the second currency, you buy. If you believe the first currency will become weaker than the second currency, you sell. Remember this: buy. Expect the price is you expect the price to go up. Sell. You expect the price to go down. That's the basic idea. Bid and ask. Whenever you open a trading platform, you always see two prices. One is called the bid, the other is called the ask. Let me explain with a simple example. Imagine you go to a mobile phone. The shop says, I'll sell you this phone for 20,000. But if you try to sell the same phone back immediately, he says, I'll buy it from you for 19,500. Did you notice something? The buying price and the selling price are different. The same thing happened in Forex. The ask price is the price of which you buy, the bid price is the price of which you sell. Spread. So, what is spread? Spread is simply the difference between the ask price and the bid price. Using your previous example, if the shop sells the phone for 20,000 but buy it back for 19,500, the difference is 500 rupees. In Forex, instead of rupees, we measure this difference in pips. The difference is called the spread. You can think of it as the service charge for opening a trade. Pips. Now let's understand pips. A pips is just a way to measure how much the market has moved. Imagine you're measuring the distance from your home to your school. You just don't say it's far. You say it's 3 kilometers. The kilometers in the unit used to measure distance in Forex, and we also need a unit to measure price movement. The unit is called a pip. If someone says, I made 20 pips today, it simply means that the market moved 20 pips in the direction they expected. Lots. Now let's talk about lot size. A lot is simply the size of your trade. Imagine you go to a rice shop, you buy 1 kilogram, 5 kilogram, or 10 kilogram. The rice is the same, only the quantity change. In Forex, the currency pair stays the same, only the size of your trade change. A bigger lot size can give you a bigger profit if you are right, but it can also give you a bigger loss if you're wrong. That's why professional traders always use proper risk management. A final summary. So let's quickly revise everything we learned today. Forex means buying one currency and selling another. Currencies always trade in pairs. The first currency is called the base currency. The second currency is called the quad currency. If you think the price will go up, you buy. If you think the price will go down, you sell. The ask price is where you buy. The bid price is where you sell. The difference between them is called the spread. A pips measure how much the market has moved. A lot is the size of your trade. And that's all for class today. Don't worry if you don't remember everything. No one can no one become an expert in one day. Go through your notes, watch the video again if you need it. And in your next class, we'll start learning more advanced concepts step by step. Thank you everyone for joining this live session. If you have any questions, feel free to ask me now.